So if you go into Google and you type in when is, the first thing that it's going to assume you're typing in is when is the next housing crash. So I've got it pulled up on my screen over here, and here's what automatically pops up first out of 132 million responses. Okay, so here's what it is. The unemployment rate remains low at just 3.4% in January, which we just saw that come out last week. According to the Bureau of Labor Statistics, so while indicators show no recession right now, the Fed's action through 2022 lead most experts agree that a recession is likely in 2023. And a recession is not the same as a market crash. Very interesting. Most people in the real estate space, or most people that have been alive for the last 25, 35 years or more, remember the 2008 recession as really the most recent recession that we've had, and they assume that they're all just the same as 2008, which was a real estate crash and a real estate recession, which brought in a whole financial crisis. So this is an interesting point, is that most of the experts, if you go just a little bit further than this, and I'm not reading the full article, but that was from Real Estate or US News and World Report. If you go just a little bit further down, there's an article from Forbes here that says most experts do not expect a housing market crash in 2023. Since most homeowners have built up significant equity in their homes, the primary issue here is affordability. It's an affordability crisis, is what the article actually says. So let's go into this right now, because this is what everybody's talking about is there a crash? What are housing prices going to do? And the key here, and it's very simple, is we're in an affordability crisis. We've been saying for the last, I would say, year or so that we've hit the ceiling of affordability. Buyers are no willing to just pay more on their payment than they were in the past. Now, here's the key thing. Most people are not buying these houses in cash. They're getting a loan, which means they have a down payment and they have a payment. At the end of the day, when you have a payment and a down payment, that's your affordability. The purchase price is almost irrelevant. Now, let's go into this a little bit further. So if you're a cash buyer and you have $800,000 and you want to buy a house, you have $800,000. But most home buyers have a payment of, let's just say, $5,000 payment, and they have $80,000 down. What can they do with that? Well, they can arrange that and get a couple of different loan options, but that's what they can afford. Now, the housing price is going to really just dictate, we got to get to that payment. So this is where housing prices are going to dramatically depend, I shouldn't say dramatically depend, but housing prices are going to depend on what interest rates do. If interest rates go from 6 to 7% like they have in the last couple of weeks, prices might adjust. Someone's going to say, hey, I'm not willing to pay an extra $500 a month. I'd rather just offer a little bit less on the house, and if we don't get the offer accepted, I can't afford it. I don't feel comfortable. Now, if interest rates go from 7 to 6 the following week, then they can afford a little bit more. Maybe they go shopping for a little bit higher house or whatever it might be. Here's the point, is buyers right now, it's a fluid market. For the last 2 years, we've seen a straight up market where everybody knew that if I didn't buy this house this week, the next one that gets listed is gonna be $25,000, $50,000, or even $100,000 more than the last one. And that is what brought so much crazy demand, so many crazy offers and terms. Here's what we're seeing right now. There's a lot of buyers that wanna buy houses, and the smart ones that are out there are taking advantage of all kinds of different rebates and options from the loan side, but they're also getting really creative and negotiating with their agents. At least if their agent knows what they're doing, you're able to go in and you're getting really creative with your buyers. So here's my opinion, or here's my advice to you as maybe a consumer thinking about buying a house this year, or if you're a seller, really listen up. You as the buyer should be out in the marketplace regardless of what you think prices are doing. If you're wanting to make a move, here is the key. Stay in the market, and when you see an opportunity, you can jump at it. You're not necessarily saying you need to go out and look at houses every single weekend, but keeping a pulse on what's going on in the market. You've got your house hunt set up, you've got your agent looking for properties off market, so when you find something, you're able to really just go in there and make that opportunity happen. So my advice to you as the consumer, as the buyer, maybe thinking about buying a house, or if you're a seller, you really need to listen up, is it's about feeling out the opportunities in the marketplace. When you find that house that you like, have your ducks in a row and have your agent put an offer together that makes sense for you at that time. It's hard to say right now with interest rates going up and down in a pretty volatile market. They might be at 7% right now. Last week they were at 6. They were at 6.5 the month before that, and they're going to change again. So when rates are in an environment like this and prices are not steady, you're really going to see windows of opportunity. you're going to see windows of opportunity in this marketplace probably for the next year and a half. Now, if you're a seller, you need to take advantage of that as well too, but buyers specifically, stay in the market. If you see interest rates tick up and you think your affordability just went down, don't get out of the market. Stay in there and get your offers accepted at a lower price, maybe a little bit extra concessions. Sellers, I hope you heard that. If interest rates are ticking up and your home's on the market right now, you can expect that a buyer is gonna expect you to make that a little bit more affordable. And there's a lot of different ways to do it. There's buy downs, there's seller credits, there's different loan programs, there's adjustable rate mortgages are back. And the reality is, both on the selling side and on the buying side, your agent has to know what they're doing. You can no longer get away with putting your property on the market with iPhone pictures, with no open houses, with an out-of-area agent. You can get away with that. You're just going to have to pay for it in your price. And saving commissions, you tell me if that makes a lot of sense. Go through Zillow and look at the houses that look the worst. And I would imagine most of those sellers are saving money on commissions, but you tell me if you think they're saving money on the actual selling price of the home. Now, buyers, has anybody shared with you that you can get an adjustable rate mortgage if you have great credit and good income, a W-2 job, that you can get interest rates in the 5s? I know a lot of people aren't sharing this with clients, and I talk to people and they're surprised every single time we have the conversation. So here is what I'm saying to you. 1, if you're a buyer, stay in the market. You owe it to yourself to be staying up to date on what's going on in the marketplace. So if you're not already subscribed to the newsletter, go over to ocmarketupdates.com. That is where you can register for our weekly newsletters where we send stuff like this out every single Friday. All the information, it'll be in your inbox every single Friday. You can also subscribe to our YouTube channel and you'll get one of these videos every single week of what is going on in the real estate market. All right, back to the video. 2, if you're a seller, pay attention and keep your eyes on what's going on in the market and understand that you're gonna have a little bit of volatility depending on what that particular buyer who's writing an offer on your house is thinking. Just because somebody writes a crazy lowball offer doesn't mean the market's crashing. Just because it takes 30 to 60 days for you to sell your home doesn't mean the market's crashing. It's a different market, but it's a very good market for somebody who's gonna do the things properly. So if you're a homeowner, getting your home ready, getting it pretty, looks good and priced right, sells, always. If you're a buyer, make sure your agent is talking to you about all these different options. If they're not, we're always here for a second opinion. Those are some of the major things that I'm seeing right now. Is the biggest question is, when is the next housing crash? And unless rates go up dramatically, I don't think we're gonna see this huge drop in pricing that some buyers are just hoping for. Sellers, all you have to do is make sure you make your property look as good as possible, price it appropriately, and hire an agent that has a great marketing plan. Buyers, you need to make sure your agent knows how to negotiate. You have all these different plans available to you, and you are in the best position possible. That's my advice right now moving forward. Whether or not prices go down 5 or 10%, or up 2 or 3 or 5%, not really sure. It's gonna depend on what happens in the overall economy, but nobody's really pointing towards a housing market crash. The year is probably going to end up as a recession. Prices might fluctuate a little bit, but affordability is the big point here. If the buyers are no longer willing to pay a higher premium for the properties, it's probably going to have to come off the selling price. Not necessarily a bad thing or a good thing. Now let me throw you one little loop at the end of this here is the people who are going out and buying properties right now and not really caring too much about the price are investors and the hedge fund. They understand that real estate's on sale, just like the stock market's on sale. And they know that over the next 2, 5, 10 years, those values are gonna go up. The biggest difference with real estate from all those other things, especially if you're talking about investment properties, is you're gonna have cash flow, you're gonna have tax benefits, and all kinds of other stuff when you buy real estate. So the investors and the hedge funds are out buying properties, and a lot of the local buyers and sellers are looking around scared of like, gosh, I don't want prices to drop again. I don't want to do this. If you zoom out and you look at a longer time frame, you'll probably be glad you bought the home, which is a common trend when we talk about buying real estate. You buy the home and wait, you don't wait to buy the home. But you have to make sure the time makes sense for you. So if you want to talk about your situation and your position, if you're finding videos like this helpful, go over to ocmarketupdates.com and register for our newsletter. If this is your first time watching one of our videos, first of all, thank you. Subscribe to our YouTube channel. And if you want to see this in your inbox every single Friday so you don't miss it, you can go to ocmarketupdates.com. You can register for that newsletter, and we will see you next week.